One of the common misconceptions of how this works is if a life insurance policy is structured properly, your base face amount of insurance should increase over time as your cash value increases. So it's not that your original face amount would be deducted if the properly structured the right way, if the policy is structured the right way when you take a loan against it. Now, here's some of the key things with the external benefits. Number one, you could have access to as much as 95% of your guaranteed cash value as it accumulates. I think that's very important to understand, especially in a time like today when we're dealing with so much adversity in the banking system. When you have a real estate asset, typically, depending on the property, you can have an LTV on that property of somewhere between 60 to 70 to maybe 75%. But that's also based on a subjective appraised value. So how much true equity you can utilize inside of a piece of real estate, as an example, isn't necessarily relative to the type of equity that you have access to inside of your life insurance policy. We've got 95% of cash value available. The way we can access that is through loans. One of the ways we can access it is through loans. Depending on the carrier, some carriers have fixed rate loans that are very attractive in a rising interest rate environment, because it gives you security to be able to borrow money at very reasonable rates for a long period of time. There's no restrictions on the utilization of these funds. So there's no approval process. You don't need to have your credit checked. You don't have to qualify from a credit perspective. And the insurance company doesn't care what you do with the funds inside your policy if you choose to borrow against it. Furthermore, if you take a loan against, the policy continues to earn dividends despite any outstanding loans. So once you take a loan against that policy, you can use the loans to buy real estate. You can use it to send your children to college. You can use it for a business venture. You can use it for whatever you think might make the most sense, okay? But the reality of it is, I know a lot of your audience is looking at real estate, and life insurance cash values become a terrific sinking fund for a way to be able to accumulate capital to thereby be able to use when you need them the most, which is when you're being able to take advantage of an opportunity.